my clients just closed on their home yesterday with a 2.99% interest rate. Yes, in December 2025, I'll say that again, a 2.99% interest rate. Hey guys, I'm Michaela Burkett with the Elevate team powered by eXp Realty, and I'm a local real estate agent here in Charleston, South Carolina. I just wanted to share an incredible win for one of my clients. If you've been following the market at all, you know that's kind of unheard of right now. Just for perspective, the average 30-year fixed rate, according to Freddie Mac, for the week ending December 4th was a 6.19% interest rate. So that wasn't just a good deal, it was phenomenal. My clients, they purchased a 4-bedroom, 3.5-bath, 2,847 square foot home in Somerville that was only 5 years old. And the best part is their monthly mortgage payment is actually less than what most people in Charleston are paying in rent right now for way less space. If you live in Charleston, you already know it's expensive. There is no rent control right now, and so renting is really, really pricey. That's the difference between waiting and seeing an opportunity. My clients were in a lease that wasn't ending for months, but when they saw this opportunity in the market, they realized what was possible and they jumped on it. This home had been sitting on the market for almost 6 months when we went under contract. And honestly, right now, that's not unusual. Homes are sitting longer because a lot of buyers are afraid of these high interest rates. And so they're just kind of sitting on the sidelines. And guess what? That's exactly where the opportunity is. Because that home was sitting, we were able to negotiate and ended up purchasing the home for $55,000 less than the original list price from 6 months prior. So the sellers were ready to make a deal. Not only that, but they were able to transfer over the builder's original warranty because, like I said, the house was only 5 years old. And we got the sellers to provide an additional home warranty, giving my buyers even more confidence in the transaction, as if that price and the interest rate wasn't incentive enough. Back to the most exciting part, how did they land a 2.99% rate, a rate half of the national average? It's called an assumable loan, and this isn't something new. It's not a magic trick. It is a real financing tool that not many buyers or even agents are really talking about. But here's how it works. So with an assumable loan, the buyer literally assumes the seller's current loan, including the interest rate and the remaining balance. So instead of starting a new loan at today's 6+% interest rate, they step into the seller's shoes at that lower rate. Now, not every loan or property qualifies for this. It really depends on the original loan type. A lot of times FHA, VA, SDA loans, they could be assumable. Typically, conventional loans, they are not. These are not numbers from my transaction, but here's an example of how it works. So let's say a home costs $500,000 and the seller has $400,000 left on their loan at a 3% rate. If you assume that loan, you inherit that 3% interest rate and the remaining $400,000 balance. But you do need to bring that remaining $100,000 to the closing table. That can be cash or possibly another loan. That second loan could be really tricky to qualify for, though. This is why assumable loans aren't ideal for everyone. You typically do need some funds available or be in a strong financial situation. But if it makes sense for your situation, you could literally save thousands of dollars over the life of the loan. One thing to note, assumable loans can take longer to close. Our process took about 2 months, but it's not uncommon for these deals to take 90 days or more. So you do need some flexibility with your timeline and an agent who understands the process. I'll say it again, this option isn't for every buyer or seller. Not every home or loan qualifies. But in this case, my clients got a beautiful, nearly new home for a fantastic price and a crazy low interest rate because they saw the opportunity and were willing to move even before their lease ended. Now they're building equity, creating wealth, and paying way less than most renters do. It's a total win for them. So my question for you, are you missing out because you think it's not the right time? Are you scared of the interest rates? If you're a seller and wondering if you have an assumable loan, your home might have a huge advantage in this market. Let's chat and see if you qualify. And if you're a buyer and want to know if this is an option for you, let's have a conversation. These opportunities are out there, but you do need to have someone in your corner who knows where to find them and how they work. So feel free to reach out to me, comment, or DM. Shoot me a message. I'd love to help you explore your options.